Hi guys, you are welcome to my channel. Today we want to look at how we can use the price action uh, strategy to trade gold on the 5 minute time frame. I have gold 5 minute time frame on the chart. Now the strategy involves identifying the range and identifying the range breakout, allow break of structure, mark your stop loss and enter after break of structure or enter after pullback. Okay, and also note that your swing high, swing low is marked by the second candle formation. So where price drop down on the 5 minute time frame and a downtrend in this formation. Okay, as a downtrend on the 5 minute chart where we have the high, low, lower high, lower low. Okay, this lower high and lower low. Lower low because this low is lower than this low. Alright, then we have lower high and this higher low. Higher low in the sense that this low is higher than this low. And this lower high. The fact that you are seeing lower high, the fact that you are seeing lower high and lower low, that's clear. More of lower high and lower low, that's clear downtrend. Okay, so this is a high, low, lower high, lower low, lower high. So this is a lower high, lower high. This is another lower high. This is a downtrend. You might see this higher low, but you see another lower high before price goes down. That's a clear downtrend. Then you have this higher low here, but you keep seeing lower high. No higher high. The moment you see higher high, then you might have range or uptrend. Then you now have lower low. Okay. Then you have range. Okay, let's just say this very bottom part of the trend. We have a lower low and we have a lower high. Okay, and then we have lower low. Okay, now the fact that price now rises here and drops here, you already have a range. Okay, though this appears to be like higher high because this high is higher than this high, and then you now have a drop, higher low. Okay, you have a low, high, lower low, higher high, higher low. Then you now have this higher high, and then you have higher low, and then you have higher high, and later you have higher low, higher high, higher low. So the moment you start seeing higher high, higher low, just like you see lower high, lower low for downtrend. Start see higher high, higher low. That's uptrend. Higher high, higher low. That's uptrend. Price going bullish. Okay. Yeah, price went bearish here. Downtrend. Now price going bullish. Uptrend at this particular point. Okay. Now let me continue. This higher high, higher low, higher high. And then you now have higher high, higher low, and then you have higher high or lower high. Let's call this lower high or almost the same height. Higher low, then you now have higher high. So here you have a range. Here you have like a range. And I have this drop to this point. For you to have this higher low. And this low here is lower than this higher low. So you now have lower low, lower high, then you have lower low. So the moment you start seeing lower low, lower high, you're back to bearish. The moment you start seeing lower low, lower high, you're back to bearish. And then at this point, you have a price forming lower low here. Then you have price giving us lower high at this point. Then you have lower low, price forming lower low here. You have lower high, and currently price giving us lower low, but we do not know when we'll start to have price retracing for us to have lower high. But this is a clear downtrend, and it's most likely back to around where it started. So for this particular video, we have to look at the range point, the point where we have range. We have range around here. We have some form of range here, but it didn't last. But we have range here, we have range here. What do I mean by price range? Where price is not really giving definite around here, price is not giving us definite downtrend or uptrend around this area. But as we start to have higher high, higher low, then we have a clear uptrend. Here we do not have a definite uptrend or downtrend around this area. But as we start to have lower high, lower low, then we know it's downtrend. So here you have a range where price stops to go down and then prepares to go up. Here you have a range where price stops to go up and prepares to go down. So at that point of range, you have breakouts, and then you have what we call change of character. So at that point, you have breakout and you have change of character. So in the particular part where you have lower low, lower high, lower low. Then you have higher high. This is your change of character. What do I mean by change of character? The character here is bearish. Now it starts to change to bullish. The moment you see higher high show up in the space of lower low, lower high, you now start all along. You'll not be seeing higher high. You'll be seeing lower low, lower high, lower low, lower high, lower low, lower high. But at some point you saw higher low, but no higher high. So the moment you start to see higher high, you have a change of character. So this point we call it change of character. Okay. And after that change of character, you start to see higher low. Here we saw higher low, but there's no change of character. Okay, we might say there's a change of character here, where we have this high, higher low, higher high. We might call this a change of character, but it didn't really play out. It failed when price starts to track down. But here we have a change of character, then we have a range, then we start to see progressive higher high, higher low. Here too, so I'm going to zoom in for us to see what happened here clearly. Here also, price higher high, higher low, uptrend, then we saw a lower low. Just like with the way we saw higher high, saw lower low. We've never seen lower low, we've seen higher high, higher low all along. But here we saw the first lower low, because this particular low is lower than this low. Then we start to have change of character here as well. We start to see change of character at this particular point. Then we start to see lower low, lower. It did not fail. Failure means we see a change of character, then price go back the original direction, which is what happened here. Okay, around here, see change of character, lower low, lower high, lower low. Then we have lower high. Then we see higher low, and then we see higher high. Okay, this point is change of character. Well, it failed since price backtracked and continued to drop. Here we have change of character, but price backtracked. What do I mean by backtrack? Price continued the this existing downtrend that we see here. It continued here. So we have change of character. Okay, we also have the change of character here. Okay. And then we have the same change of character here. Okay, but here we do not have failure, because failure will have been downtrend, change of character, the price continued downtrend. Failure will have happened around here, but it didn't happen. Here failure will have, okay, uptrend, price give down, they continue uptrend, but there's no failure and price starts to go down. Okay, but the essence of this video is you first of all identify the range breakout. Number one is range breakout. Range breakout. Okay, where you start to have range breakout, where you start to have price changing character and they form higher high, higher low, or price changing character, they form lower low, lower high. That's your range breakout. This is the point of range breakout. This is the point of range breakout. Okay, that's number one, the first point. So here is our range breakout. Here was our range breakout for this leg, and here is our range breakout for this leg. So that's the first point. Second point is identify pullback after range breakout. Point number two. Point number 2. Okay, let me continue from here. Identify pullback after range breakout. Okay, identify pullback after range breakout. That's the second point. Now, for this particular range breakout, okay, these are pullback. Okay, this is the range and these are pullback. Okay, this can also be taken as our pullback, but it's still within the range. But this is the range and these are pullback. So that pullback is going to be the distance of this pullback is going to be our stop loss. All right. So for this particular section, this is the range breakout and this is the pullback. The distance of this pullback is going to be our stop loss. Okay, these are stop loss distance. It could be 100 pips, it could be 50 pips, it could be 10 pips. Okay, measuring from here to here. So that's from 4353, or let's say 4354 to 4361. 54 is not up to 100 pips, like let's say 90 pips. Okay, and that's what we have here. That's the stop loss. Now, after identifying the pullback that you use for your stop loss after range breakout, allow break of structure. Of course, this is the breakout. Allow break of structure. This is where you have break of structure. This is a break of structure here that gave us the breakout. So this is a pullback, and this is a break of structure of this particular low. So this is swing low, this is swing high. So allow the break as price breaks down this swing low. That's your break of structure. So that's point number 3. Allow break of structure. Alright, so for this particular side, break of structure will be here. There will be a break of structure. Here is still within the range, but here is a break of structure because price now assumed to be out of the range. You have higher low, higher high, the higher low, this high, higher low, lower high, higher low, higher high. So price is already out of the range. Then you see a break of this structure. Okay, you allow this. That's point number 3. So once this has happened and you see this candle closes to show break of this structure, then that takes us to point number 4, which is stop loss equals distance of pullback. We've already done this. This has been measured and used here. Stop loss equals distance of pullback. These are measurement of the pullback, this pullback. That's equals to stop loss. Then point number 4, enter after break of structure or enter after second pullback. And point number 5, enter trade after break of structure, or enter after second pullback. Okay, you already know your stop loss, right? This is your stop loss level or limit, as the case may be. So we are now looking at where you can enter the trade based on that particular stop loss. Okay, so enter after break of structure. So you have break of structure, you can enter after this around here, but you know your stop loss will be this. So you can, this is the break of structure for this particular current trade. You can enter around here. Okay, but I did my own entry here because I didn't check the chart on time. I didn't get to analyze the time chart on time. So for this particular enter trade after break of structure, or enter after second pullback. So if you enter here, you can ride, or if you can enter after this second pullback. This is the first pullback, this second pullback. You can enter here. Now this is the first pullback after breakout. This is the first pullback. This is the second pullback. You can enter here. This breaks of structure, and that's what I did here. Because this is another break of structure. So all I did was enter after the second pullback, because I believe the trend has commenced fully. And if you look at the stretch, this is the stretch of the previous opposing trend, and price is already getting to half of that, like 50% retracement, Fibonacci retracement, and you have a trend on the 5-minute time frame developing. So you enter at the break of structure of this first pullback, or at the break of structure of the second pullback. That's point number 5. So point number 6 to note is swing high or swing low is after second candle formation. Okay, so what does that mean? If you look at the top, okay, 1 2, this 1 2 for 2 bullish candles, this 1 2, this particular point is your swing high. You look at this point, price has been dropping there. You see 1 2, these 2 bullish candles, this is your swing low. 1 2, this is your swing high. So for you to mark high, low, low, high, for you to know it's higher, high, higher, low, you have to identify your swings first. Now you have 1 2, this is your swing high. 1 2, swing low. 1 2, swing high. 1 2, swing low. 1 2, swing high. So point number 6 is telling you swing high or swing low identification is after second candle formation. So where is second candle formation? You have first bullish candle formation, second bullish candle. So this is your swing low. First bullish candle formation, second bullish, this is your swing low. First bearish candle formation, second bearish candle formation, this is your swing high. It does not really need to be consecutive, but in as much as the second candle is lower than the close of the second candle is lower than the close of the first candle, it forms your swing high. First candle, second, this is consecutive candle, bearish candles, this is your swing high. 1, 2. This is like a doji, but it's bearish, followed by a long candle. This is a swinger. So that's for you to identify your swings. Okay. So that's what the strategy is all about. Your TP will be ratio 1 to 1. 1 to, beg your pardon, ratio 1 to 2. TP could be risk reward 1 to 2 or 1 to 3. So when your stop loss is this 1 to 2 of stop loss or 1 to 3, but I would prefer for this particular trade, I would prefer the base, somewhere around the base, because I see this as a double top for me. So around here, price might start to range, and then we might see another range, change of character, then price might go up again. For us to now have like a triangle. So that's that for the strategy. It works on all time frames. But identify range breakout, identify pullback after range breakout, allow breakout structure, stop loss. It's not a perfect strategy, but at least you might have more wins than loss. But try it out on demo account first before you start on your live account. Try it out on demo account. It works for forex, pairs, works for gold, works for volatility indices. See you in the next video. Don't forget the website www.fxtrader.com. You can visit that website to learn more on this strategy. See you in the next video.